Okay, buckle up, everybody, because today we're taking a deep dive into Telvantis,
Ooh,
a
Telvantis.
company that's making some pretty bold claims in the telecom world. They're saying they're going to hit $1 billion in revenue by 2029. And
$1 billion.
now, before we get too excited, got to throw out the usual disclaimer. This deep dive is just for informational purposes, definitely not financial advice.
Of course, of course.
All right, so with that out of the way, let's unpack what makes Telvantis so interesting.
Well, I think what really grabs you right away is that they're not just aiming for growth, they're talking about tripling their revenue in just 5 years. It's like going from, I don't know, a small bakery to a nationwide chain practically overnight.
Wow, yeah, it's a pretty ambitious goal. So where are they starting from? What's the foundation of this telecom hopeful?
Well, Telvantis is actually a relatively new player, even though they've got roots in the industry. They started out as RADR Inc., traded on the OTC market, but then they did a complete 180, a reverse merger with the Maxidia SPA's U.S. and Irish operations.
Ah, so it's not just a new name, it's a whole new business model, a new direction. That's a pretty big gamble, isn't it?
It is. It definitely is. But you got to remember, reverse mergers can be a smart move for companies trying to grow fast and get on the public markets quickly.
Okay, so they want to make a splash, I get it.
Yeah.
But do they have the right people to lead this ship towards, $1 billion horizon?
Well, at the helm of their operating entity, Telvantis Voice Services, Inc. They've got Mikkel Ebdu, and let me tell you, this guy knows telecom. Over 30 years of experience in tech, that's like a lifetime in this business.
Yeah, no kidding. He's seen it all, from the early days of mobile to the rise of broadband. That kind of experience could be priceless in such a fast-moving industry. But experience alone doesn't guarantee success, right? So what are they actually doing to, build confidence with investors?
One big thing that jumps out is that they've cleared all their outstanding convertible debt. That sends a huge signal to the investment community.
It's like they're saying, hey, we're financially solid, we're committed to shareholder value, and we're here for the long haul. It definitely makes you pay attention.
Absolutely. And they're also taking other steps to build trust and transparency. Like they launched this shareholder ambassador program, giving perks and insights to long-term investors.
A shareholder ambassador program, huh? That's interesting. Sounds like they're trying to create a community around the brand. But is it just hype, or is there real substance behind it? Maybe their CFO's interview on the NYSE floor can shed some light on that.
Yeah, that's right. Daniel Gilcher, their CFO, did this really insightful interview at the NYSE. He laid out their growth strategy, and you can actually find the interview on YouTube.
I'll have to check that out. Okay, so they've got a seasoned CEO, they're cleaning up their balance sheet, and they're actively engaging with investors. That's a good start. But what exactly is their core business? What are they actually selling?
Telvantis operates in two main segments, mobile operators and enterprises.
Okay, so for mobile operators, I'm guessing they provide that high-volume voice and SMS traffic connectivity, essentially keeping those communication lines buzzing. And for enterprises,
They offer messaging services and what they call value-added solutions, basically helping businesses connect with their customers more effectively.
okay, but that's a pretty crowded space.
Yeah.
What makes them stand out from all the competition?
Well, behind all this, they've got their secret weapon. It's called a communications platform as a service, CPACE.
CPACE, huh?
Yeah.
Sounds kind of technical.
Yeah, but it's basically a set of tools for building custom communication solutions. Imagine you're a business and you want to add text message reminders to your app or build a chatbot for customer service. Their CPAS makes that easy, and that gives them a real edge in the market.
Got it. So they've got the foundation, the leadership, and the technology. Now let's talk about the future, because this is where things get really interesting. They've laid out this super ambitious 5-year plan.
Yeah, they're not messing around. They're talking about a quantum leap from about 300 million in revenue this year to a whopping billion by 2029.
Whoa, that's a bold projection. Are they just throwing out big numbers to get attention? Or is there a real plan behind this billion-dollar ambition?
No, their approach is actually pretty strategic. They've got three main avenues for growth: organic expansion, strategic acquisitions, and diversifying acquisitions. Think of it like a three-pronged attack on the telecom market.
A three-pronged attack? I like the sound of that. But break it down for me. What does each prong involve?
All right, so their first line of attack is organic expansion. They're focusing on growing their existing voice business in the US and Europe, which they expect to account for about half of their projected growth, basically doubling down on what they do best.
Okay, solid strategy. Build on your strengths. What about those strategic acquisitions? What are they targeting there?
They're looking to buy up niche providers that complement their existing services, filling in the gaps, expanding their portfolio strategically. This should contribute about 10% of their growth.
Got it. So they're not just buying any company that comes along, they're being selective. And the final prong, those diversifying acquisitions, that's where things get really interesting, right?
Exactly. This is where they're aiming to make a big splash, expanding into new and attractive markets, both in the US and internationally. We're talking a whopping 40% of their projected growth coming from this avenue.
So they're basically saying, we're not just going to be a player, we're going to be a global force in telecom. That's a pretty audacious statement.
It is, and it remains to be seen whether they can actually pull it off. But one thing's for sure, they're not lacking in ambition.
Ambition is one thing, but can they back it up with financial performance? Are they just chasing revenue, or are they aiming for sustainable profitability too?
That's the key question, and one we'll dig into more in the next part of our deep dive. But just to give you a sneak peek, they are projecting double-digit operating margins and a significant operating profit by 2029. So they're not just going for growth, they're going for profitability as well.
Okay, so they've got a plan, they've got the leadership, and they've got the ambition. But the big question is, can they actually execute? We'll dive into that and more in part 2 of our Telvantis deep dive, so stay tuned. Welcome back, everybody. So let's dive into Telvantis's financials and see if their ambitious goals actually match up with their performance. We're talking about a company that's projecting to triple their revenue in just 5 years. That's a huge jump.
Yeah, no doubt about it. And to see if that's even possible, we got to look at where they're starting from. According to their presentation at the Microcap conference, Telvantis pulled in about $349 million in revenue last year in 2023. That's already a big jump from the $132 million they reported in 2021. So they're definitely on an upward trajectory. But can they keep that momentum going?
That's the million-dollar question, right? What's driving this initial growth spurt? And is it sustainable?
Their main revenue driver is their voice traffic business, serving those mobile operators we talked about. That segment brings in something like 90% of their revenue, so it's their bread and butter, really. The other 10% comes from their enterprise messaging services.
So they're pretty heavily reliant on one revenue stream, which could be a bit of a vulnerability if that market were to, take a hit. It could really impact their growth projections.
Yeah, that's a fair point, and something investors should definitely keep in mind. But Telvantis is aiming to diversify through those acquisitions we discussed, expanding into new markets and offering new services, so they're not putting all their eggs in one basket, so to speak.
That makes sense, but let's not forget, the telecom landscape is, well, it's super competitive. You've got giants like Verizon and AT&T dominating the market. Can Telvantis really carve out a decent chunk of that market share, especially with such aggressive growth targets?
It's a bit of a David versus Goliath situation for sure. But remember, Telvantis is focusing on those niche markets, those specialized services, areas where they can really stand out and build a loyal customer base. It's not about going head-to-head with the giants. It's about finding their own lane and winning in that lane.
So it's like a speedboat navigating around those massive cargo ships. Agility and specialization are their advantages.
Exactly. And they've already shown they can compete. They've got a 100% client retention rate since they started, which says a lot about the quality of their services and their ability to build strong relationships with their customers.
Okay, that's good to hear, but let's talk about profitability. They're projecting these huge revenue numbers, but are they actually making money?
That's where things get a little more complicated. They reported an adjusted EBITDA of about $9 million in 2023 with an EBITDA margin of around 5%. It's not terrible, but it's not, amazing either.
Yeah, a 5% margin doesn't exactly scream high-growth tech company. So how do they plan to boost that to reach those ambitious profit targets they've set?
That's a great question, and one that investors should really scrutinize. Their strategy relies on a few key things. First, they're focusing on operational efficiency and cost control. Remember that $45 million working capital facility they secured?
Yeah, the one that replaced their previous unsecured loan. That was a smart move.
Definitely. By getting better financing terms, they're reducing their interest expenses, which directly improves their profitability.
So they're tightening the purse strings internally. What about externally? How are those acquisitions going to affect their bottom line?
They're aiming to acquire companies that not only expand their offerings, but also bring in strong margins. They're being very strategic about buying businesses that will have a positive impact on their profitability, not just boost their revenue.
So it's not just about growth for the sake of growth. They're being financially savvy in their acquisition strategy. But acquisitions can be risky, right? There's always the potential for integration problems, unexpected costs, even cultural clashes. How can investors really assess the risks and rewards of their acquisition strategy?
That's a great question, and one we'll explore in more detail in the final part of our deep dive. We'll look at the leadership team's track record with acquisitions, we'll scrutinize their target companies, and we'll assess the potential pitfalls they'll need to navigate.
Sounds like we've got a lot more to uncover. Join us for the final part of our Telvantis deep dive. We'll unpack the risks, take a closer look at the leadership, and ultimately figure out if this billion-dollar dream is actually within reach. Okay, we're back for the final part of our Telvantis deep dive. We've looked at their financials, their growth strategy, and that ambitious billion-dollar goal. Now let's zoom in on the people at the top. Can this leadership team really take Telvantis to such lofty heights?
That's the big question, right? A bold vision is one thing, but actually making it happen, that's another story. So let's start with the CEO, Michael Abdu. We know he's a telecom veteran, over 30 years in the business, but what does that experience really tell us?
Yeah, it's not just about years on a resume. It's about what he's actually achieved, what challenges he's faced, how he's adapted to the, constantly changing tech world. What insights can you give us on that?
Well, Abdu's navigated a lot of shifts in the industry throughout his career, from those early days of mobile phones to the rise of broadband and now the 5G revolution. It suggests he's not just experienced, but he's adaptable, forward-thinking. And that's crucial in a fast-paced industry like telecom.
So he's not just riding the wave, he's anticipating it. That's good to hear.
Uh.
But a CEO can't do it all alone. What about the rest of the leadership team? Do they have the right mix of skills and expertise to pull off this growth strategy?
It looks like they've put together a team that combines experienced execs from Mexedia, their parent company, with some new talent specializing in areas like 5G and cloud communications. So it's a mix of, institutional knowledge and fresh perspectives.
That makes sense. You need the veterans who understand the ins and outs of telecom and the newcomers who can bring in those innovative ideas. But let's circle back to those acquisitions. They're betting big on integrating all these different companies into their existing structure. It's got to be risky, right?
Oh, absolutely. Integrating acquisitions can be a real minefield. You've got to blend different company cultures, systems, processes. If you don't handle it carefully, it can be a recipe for disaster.
So how can investors get a sense of their ability to, navigate those potential pitfalls? What kind of track record should we be looking for?
I'd say a good place to start is by looking at the track record of their parent company, Mexedia. Have they successfully integrated acquisitions in the past? What was their approach? Did they create value or did things go south? These are the questions investors need to be asking.
Like checking their homework, right? Making sure they've learned from past experience. But even with a good track record, there are always those unknowns. What else should investors be looking at?
The quality and fit of their target companies is really important. Are they buying companies with similar cultures and values? Do the acquisitions make sense strategically in terms of complementing their existing business and getting them into new markets? Those are key indicators of whether they're making good decisions.
So it's not just about buying anything that's available. It's about finding the right pieces that fit the puzzle.
Exactly. And another thing to remember, acquisitions can put a strain on a company's finances. Especially if they're using a lot of debt to fund them, investors need to watch their debt levels closely and make sure they're not getting in over their heads.
Right. A healthy balance sheet is essential for long-term success. So let's wrap this up. We've explored Telvantis' financials, their growth strategy, the leadership, and the potential risks. What's your overall assessment? Can they actually hit this billion-dollar target?
It's a bold goal, no doubt. And there will be challenges along the way. But they've got some things working in their favor. An experienced leadership team, a solid core business, and a clear plan for growth. They're also shoring up their finances and taking steps to build trust with investors.
But
There's always a but, right? Investors need to remember those projections are just that, projections. The telecom world is always changing, and there will be bumps in the road.
so it's a story that's still being written, and ultimately each investor has to decide if they want to be part of that story.
Exactly. This deep dive has given you the info you need to start your own research. Dig deeper into their financials, look closely at their acquisitions, and most importantly, figure out your own risk tolerance.
Well said. So that wraps up our deep dive into Telvantis. We've seen their ambition, their potential, and the risks they face. It's a reminder that investing is full of both opportunities and uncertainties, and doing your homework is essential.
Absolutely. And as always, The learning doesn't stop here. Stay informed, stay curious, and keep digging into those companies that pique your interest. You never know what you might find.
Until